Alright guys, so as the end of the world approaches, it's really good to look at the canary in the coal mine. I'm talking about gold, and the price really tells us a lot. It's now at an all-time high, over $2,600. Gold returned 27% this year alone, and that is the level of danger the world is in. We have pages exploding in Lebanon, Israel, Hezbollah, they're on the brink of something big. The Middle East, they're just reaching a new fever pitch. Then we have the UK demanding deeper strikes in Russia. Now I find this crazy, but Lemmy, the British Foreign Secretary, is prodding the United States. He's telling Biden and allies to have some guts, to have some fortitude and escalate even further. So we could be seeing Storm Shadow missiles raining deeper into Russia really soon. And these are just some of the geopolitical risks that could explode. This is why we are seeing this big spike up in gold price. It's a barometer of the world ending. But what's more important is the structural change in the world. Deglobalization is here, and we have a new report of this spreading all the way to the Middle East. Saudi Arabia is secretly buying a ton of gold. The Saudi Central Bank allegedly bought over 160 tons of gold since 2022. And if we look deeper into the report, it's actually quite compelling. Now, Saudi Arabia buying gold isn't good news for the Biden White House. The Petrodollar agreement, the idea was to recycle dollar revenue back into US bonds. The Saudis dumping dollars for gold is a bright red flag to the US, especially when it comes to their influence in the Middle East. This chart shows us the Saudi buying patterns. Before 2022, gold imports usually dipped when prices started to rise. But after the war started, the kingdom has been buying more and more volumes despite the price flying to the moon. Their imports are staying strong month after month. Demand is becoming inelastic. It's as if gold is becoming a critical import like food and grain. The Saudis, of course, can't really make a public announcement on this, that they are stockpiling gold. It would be unthinkable. It's too bold, and it would just rub the US the wrong way. But the data tells us the Saudis are buying a whole lot of gold for their reserves, and they are shipping the bullion from Switzerland. Comparing consumer demand to the net import of gold, it's obvious MBS is stockpiling for its national reserves. Consumer demand is around 12 tons a quarter, but since the second quarter of 2022, total imports were around 20 to 30 tons. So there's this big excess of gold flowing into Saudi Arabia. Despite a big trade deficit this year, they are still buying gold, which really shows us the level of trust they have with dollar assets. The Saudis will keep selling their oil in dollars, that won't change, but they are also looking to move away from holding only US bonds, and maybe this is why.
Our Congress has given us the power to seize Russian assets in the United States. We intend to use it. We're working with our G7 partners to see that Russia's immobilized sovereign assets are used to remedy the damage that Putin continues to cause. The G7 can unlock billions of dollars and send a powerful message to Putin that time is not on his side.
This is essentially what countries fear, right? If you fall out with the US or the West, they could always immobilize your assets, and in the worst case scenario, they'll even use it as well. This is no longer a rumor or speculation. The G7 has indeed confiscated the Russian reserves, and it's all over the headlines today. Europe is giving Ukraine a $39 billion loan, and the loan is backed by the frozen Russian assets, and it's very likely Ukraine will default. This means the frozen reserves will be used to bail out bondholders. As long as you have money in Western assets, there's always this underlying risk that could happen. Saudi Arabia, they could be a friend to the US today, but tomorrow is not guaranteed. It's important to recognize that Saudi Arabia is moving closer and closer to China as well. And a big shoe to drop will be the kingdom pricing oil in the Chinese yuan. The Saudi industry minister, he was in Hong Kong a few weeks back and announced this to the world. Saudi Arabia is open to the idea of a petro yuan. This will be a big tailwind for gold down the road. If this really happens in the months or years to come, we can expect the Saudis to find a new reserve asset. In 2023, Saudi exports to China hit an incredible $65 billion, of which 54 billion came just from exported oil. In other words, 84% of exports to China are oil sales. China is their biggest customer and the Saudis are enjoying a huge trade surplus with this relationship. Moving to the RMB would be abandoning the petrodollar, and when the Saudis earn fewer dollars, there's less need to recycle them back into treasuries. Those are the big shifts happening in the global economy. As more countries trade with China and BRICS, fewer transactions will be done in the US dollar. China's aim is very simple here: de-dollarize as much of their trade as possible. This way, they protect their trading relations and their banking sector. Since 2010, China has been selling their exports more in the RMB. It was less than 1% decades back, but this has grown to almost 53% today. China settles over half of their trade with the world in RMB, their local currency. So they are importing and exporting less in dollars. And this sets up a very important trend for Beijing and countries trading with them. A very simple correlation but extremely crucial to our understanding of gold. As more trade gets de-dollarized, China, BRICS, and other trading partners, they will need to store their wealth elsewhere. Gold will be a big beneficiary of this. From 2015 to 2018, China's gold holdings were only 2.5% of their total reserves at best. But we know what happened in 2020 and beyond. The US printed a ton of stimulus money and weaponized the dollar against Russia. As a result, China lost faith in American assets and they doubled their holdings of gold. It's almost at 5% of total reserves today. And this brings us to the biggest problem with holding US assets. And it's not even about dollar weaponization. That is bad enough, but the real crisis is a sovereign debt default. As Obama puts it, we are only 44 days away from the US election. And no matter who wins, whether it's Trump, whether it's Harris, we are going to jump into a bigger fiscal fire. The national debt is going to explode even further. The US government is going to spend a record $1.2 trillion on interest payments in 2024. It's like paying the minimums on your credit card without even touching the principal. You can never clear it without eventually defaulting on the debt. And when Judgment Day comes, it doesn't matter if you're China or your US ally, your holdings of US bonds will be devalued. The Treasury will have to go to the Federal Reserve. They will knock on the door and they'll beg to print money to monetize the debt. And a big shout out to our sponsor today, Indigo Precious Metals. When it comes to buying gold and silver, I trust Indigo Precious Metals in Singapore. They have made investing in precious metals safe, fast, easy, and simple for both small and large scale buying. I've been stacking gold for over a decade now, and I've learned two things when buying. You want to buy authentic gold bullion, and you want to buy it at the lowest premium possible to stretch your dollars even further. And I'm glad to say I found both of this at Indigo Precious Metals. There's a lot of uncertainty in the world today. We have geopolitical chaos and the values of fiat currencies getting debased. Inflation is not gonna end, and that's why I consistently buy gold to preserve my wealth. Indigo Precious Metals is a leading retailer in Singapore. They specialize in physical gold, silver, and platinum. They are my one-stop shop when it comes to buying bullion. Their prices are sharp, and they have the best brands on sale, and I can test the gold on the spot. So if you're looking to make your first gold purchase, Indigo Precious Metals is the best place to start. Whether it's 1 ounce or 1 kilo, this is the reputable dealer you are looking for. So take action today. Click on the link below and enjoy a discount on your first purchase with the code SeanFu. Start your gold stacking journey today. We have really crossed the Rubicon here. It's not a matter of if a default will happen, it's when the default will begin. The interest payments aren't just a minor line item anymore. Janet Yellen herself is stuck in the twilight zone. She can't even admit that the debt is a national crisis.
So $51 trillion of debt up from $33 trillion doesn't bother you?
I think the path that is set out in the president's budget is fiscally sustainable.
Okay. Well, how much debt is too much? Tell me that.
Well, I just gave you the metric that I think is best for assessing fiscal sustainability.
Okay. Let me ask it in simpler terms. Didn't follow you there.
This is the primary reason why countries are moving away from the dollar as a reserve asset. Sure, it's still the reserve currency. Transactions in dollars will most definitely continue. But storing your money in treasuries long term is a sucker's bet. And let's put the numbers in perspective because it shows us how close we actually are towards a debt crisis. The 1.2 trillion in interest payments is huge. It's 50% bigger than defense spending in the US, and that alone says a lot. And the interest costs are just $300 billion shy of social security payments. It's impossible to cut away any entitlements to pay for the national debt now. Maybe 10 or 20 years ago, you might be able to do that, but it's no longer feasible. We are well past the point of no return. Now, I wish I could say 2025 would be different, that a new president will turn things around and get the national debt in order. But if you listen to the rhetoric from Trump and Harris, it's a disaster. The US economy either slams into an iceberg or gets tossed into an active volcano.
What else are you going to do to fix this problem with inflation?
All right, thank you. Well, let's start with this. Prices have gone up, and families and individuals are dealing with the realities of that bread costs more, that gas costs more. And we have to understand what that means. That's about the cost of living going up. That's about having to stress and stretch limited resources. That's about a source of stress for families that is not only economic, but is on a daily level, something that is a heavy weight to carry. So it is something that we take very seriously, very seriously. And we know from the history of this issue in the United States that when you see these prices go up, it has a direct impact on the quality of life for all people in our country. So it's a big issue, and we take it seriously.
Kamala's plan to fix inflation is a word salad. You can't even make this stuff up. This might be the next US president, and her plan is price controls, going after grocery chains. According to the Tax Foundation, Kamala's tax plan is even more disastrous. She wants to raise taxes on companies and capital gains. Now, this sounds smart and feasible, but in fact, her plan could grind the US economy into the ground. GDP could fall by 2%, wages could drop by 1.2%, job growth will also collapse by almost 800,000 jobs, and this will make paying back the national debt even more difficult. You might bring in more money short term, but US growth could be destroyed in the process, and the shortfall will have to be covered once again by deficit spending. The plan is to squeeze the private sector to balance the budget for her giveaways, but it will only backfire badly on the US economy. Now that's Kamala, but Trump's policies are also a nightmare. He has threatened to punish countries looking to leave the dollar. Now that's bad enough, but he's going to take things to the next level now.
I will pass the Trump Reciprocal Trade Act. If China or any country makes us pay a 100 or 200% tariff, we will make them pay a reciprocal tariff of 100 or 200% right back. In other words, if you screw us, we will then screw you. It's very easy. It's very simple. It's a very simple plan.
And knowing Trump, he could definitely do it. He could unleash a global trade war with every country on planet Earth. If you leave the dollar, you'll get punished. Any country that tariffs the US will get hammered as well. Global trade could really grind to a halt, and suddenly the world will be faced with a very big dilemma. We have to exit the dollar even faster and trade amongst ourselves, and this will be very bad for the national debt and inflation. So either way, de-dollarization will continue to escalate. This is just the calm before the storm. But let me know what you think. Will the Saudis keep buying gold? And who is worse for the dollar, Trump or Harris? Let me know in the comments below. Stay safe, be sure to smash the like button and subscribe as we navigate through these crazy times.